Dilip Bhat joins us, and before I go to Dilip Bhat, I want to throw this data at you, Dilip. And this incredible data. How much market cap addition Reliance has seen in this year? Dilip, hear me out. 1 lakh crore. HDFC Bank has added 60,000 crore. Maruti has added 40,000 crore. ITC has added 46,000 crore. Dilip, last time when such a thing happened, you know what happened after that? 2008 happened.
Interesting statistics, Nikunj. And I would say that, we are always, there is always a history which is behind us and which really also beckons us at the moment. Having said that, I think there is one more thing which is really playing out and which becomes very challenging is where do you find values? Because without any argument, I can safely say that most of the stocks are in a very expensive valuation zone. So I think that also brings us to the point whether we are on the cusp of any major fall. I think there are two things which probably are going to be slightly different. One is the domestic inflow has been very strong as what we have seen over last 8 months or 12 months that we have seen. And the SIPs have reached a record high of almost 5,000 crores per month. But at the same time, to really complement this, the FII flows have turned very positive in the cash segment. So I think we, in a sense, the liquidity is in a very sweet spot. So I think that is what really matters at the moment, Nikunj, because, this will take care of any significant correction that we may even think about, because both the liquidity factors are pretty strong. And we are seeing that emerging markets and also more so India are continuously seeing a good flow because they have really fared very well in the last 4 to 5 months. So I think against that background, while it is very difficult to really pick some of the top bets, the challenge is extremely high. But still, I think you have to flow with the tide. I think it's very difficult to take a contrarian call at this particular stage.
Never go against the mob. Because if you go against the mob's going to rob you. The mob is outright bullish. And you know what, whereas we are talking about fresh flows, and Dilip is making a great point on the fact that SIPs are picking up. PF, long-term institutions like EPFO and some pension schemes have started investing or increasing their commitment towards India. So that 40K1 type of long-term 10-year, 15-year money is now coming to India. We always wanted that. Now it is coming. We are trying, we are complaining. But flows are very, very strong. And that is something which we must respect and which we must really, really regard. Dilip Bhat, I've said enough and good things about Maruti. But at 6,000 rupees or 6,300, is Maruti a good stock to buy?
Nikunj, when you always look at your portfolio, there are certain portfolios you want to make it a part of your core portfolio. Now, typically like in bank, HDFC Bank is so much of a cliche that whatever happens, you have to have HDFC Bank as a part of your core portfolio. Similarly, HDFC. I think Maruti is bracketed in that category. That your question may be very valid, whether it can give a very good returns from the current level. At times that doesn't really bother you so much, because if you were to take a slightly longer term horizon, and as what you very rightly and very nicely summed it up, they have got a real pulse of the Indian population, the middle class population, the aspirational class. And I think they have been getting it right. So it is, something like what Hero Motors had this Splendor, that one bike which really for years and years kept on giving them the top line and the bottom line for so many years. So I think coming back to Maruti, it's probably in that category that you wouldn't really trade for a short-term gain, but you want to have some of these stocks as a part of your core portfolio. So even if it gives around 15% return, say short-term it may not give you, but on a longer-term basis, if it gives you 15% return, so be it. I think it will be very difficult to say that one should remove that from the portfolio. It may not give such a great return in the short run, but in the long run, it is still one of the safest bets to have even amongst the frontline companies.
But where does that leave the story with Tata Motors, Dilip? Because like I was telling Nikunj, you know, both these stocks are institutionally held. They are darlings of a lot of foreign portfolios, domestic mutual fund portfolios. And the conviction with Tata Motors on the premise that there is a value bias, it's a cheap stock, is still strong, despite the kind of headwinds that, you know, we've seen with JLR. The domestic business, of course, is not showing any signs of a strong revival.
So, you know, just before I take Tata Motors, I'll just complete one last thing about Maruti. You know, what we are really expecting in Maruti is that over next 3 years, they still continue to clock an ROE in excess of 22-23%. So, you know, the compounded ROE of 22-23% itself tells a lot of story. The valuation is expensive, no doubt about it. But I think even the bottom line growth of 20-22% plus also makes it a stock which you would prefer to have it in the portfolio. Coming to Tata Motors, I think yes, it has had a very checkered kind of a past that what we have seen, and what really the reservations are more on the fact that it is more of an overseas story than a domestic story, whereas Maruti is completely a domestic story that we are talking about. Exports also, of course, giving them a good support. But Tata Motors is still, after all, you know, is a story of how the Range Rovers and the Jaguars really fare in the overseas market. And then when it comes to that, you really have to compare it with the similar auto companies elsewhere. How they are priced, how they are being valued. So in that sense, I think Tata Motors always probably will get a lower P than what we are talking about. And also the fact that the amortization of their capex is something which has always remained an issue with the analyst. So I think all said and done, maybe in the short run, Tata Motors possibly will continue to suffer, maybe 1 or 2 quarters here and there. But again, I think in the longer term scenario, it still continues to remain cheap. And it's not that it's going to, we don't expect it's going to become expensive, but still I think the valuations are far too compelling. And I would really wait for 1 or 2 more quarters, even if it doesn't fare. But I think that's a stock that one should try to buy.